So I've been pretty excited about this panel, and Natalie was asking me earlier, so what are you guys talking about? And I was like, well, we're going to talk about when the TradFi banks are going to figure this shit out. But she didn't use it, so I said I would. And so we've got one of the largest traditional finance banks here, Puneet with Citibank, who has been quite progressive with what they've done. And then we have somebody sort of in between Fidelity, and then obviously we've got Bitwise, who's all in on this. And this will be a great discussion. Thanks for everyone who's here in person. For the 80,000 or so of you watching live streaming, awesome. Thank you for attending too. And we'll get right started. Hunter, why don't you just start, give us a little bit of your background, your journey into Bitcoin, into Bitwise, and explain to everybody what Bitwise is as far as a company.
Sure. Thanks, Phong. Awesome to be here. Love the pioneering work that MicroStrategy has done, so it's a pleasure to be with all of you and those of you I've had a chance to chat with. Bitwise is striving to be a best-of-breed specialist in Bitcoin and the digital asset space. We manage over 18 investment solutions to help investment professionals get exposure to the space. We have one of the largest Bitcoin ETFs, that's the Bitwise Bitcoin ETF. We manage the largest crypto index fund that publicly trades. We have separately managed accounts and a whole bunch of solutions. But a large part of what we do is we spend time with investment professionals across the country who want to take advantage of the space, but are ultimately extremely busy with 99 other things going on. And if it's going to be a 1 or 5% part of what they're doing, they need leverage. And they need to feel like they don't have to Google every time they read a headline or every time a client comes back from Thanksgiving and their nephew said, I heard that I should be buying Cardano. Not to work any of you up. So they can rely on us, and we'll get into it more. But today we are partner to over 15 banks and broker-dealers in their wealth management divisions, and we serve a few thousand RIAs, family offices, and wealth management teams.
Awesome, thank you.
Yep.
Matt, so you're with Fidelity, who has really been a pioneer and a groundbreaking in sort of this space. Obviously, your ETF is doing extremely well. Tell us a little bit about yourself and your background.
Sure, so I've been at Fidelity about 12 years. My background is on the traditional ETF side. I personally discovered Bitcoin around 2017 when I was podcasting as I walked to the office in New York City, and I kind of just decided I wanted to make this my career. And I was fortunate enough to be at a company like Fidelity, who, private company, takes a long-term view, always has a penchant for experimenting with disruptive technology, and digital assets were really no different. So Fidelity's been in the digital asset, Bitcoin space as far back as 2014. We have a mantra inside Fidelity. It's, you scan the market, you try some new things, and then if it works, you scale it. So scan, try, scale. And I think the digital asset effort here at Fidelity is a great example of that. So the Fidelity Center for Applied Technology, it's our R&D team within Fidelity. This is where it all started. We were mining Bitcoin. We had the need to then custody the Bitcoin, so we built out slowly over time a institutional custody and execution platform. And now we have really multiple commercial offerings in the Bitcoin and digital asset space. I'm in the Fidelity Digital Asset Management space, so we represent FBTC, the Fidelity Wise Origin Bitcoin Fund, our ETF. We have a custody and trading platform, Fidelity Digital Asset Services. We offer trading to retail clients, as you know, through our retail platform. And we offer financial advisors the ability to do direct Bitcoin and Ethereum trading for themselves. So diversified financial services company. We are long-term view. We have a long-term view on this space that is very constructive. And we have many bets across the board here. So,
thank you. And Puneet, I think people may not understand what Citi's doing in the digital asset space, and I think it's doing a lot under your leadership. Maybe you can give the audience a little background about yourself, how Citi got into digital assets, and what exactly is the scope of things that you do?
Sure. So we set up this team, which is our digital asset team, about 2.5 years ago. It's brought a theme around digital assets there. I've been looking at this space over the last 5 or 6 years, and about like 3 years ago or so, started pitching internally to the senior management team in terms of starting to focus and coalesce around proper strategic way in this area. We have to do it very systematically, thoughtfully, build the right infrastructure supporting it from technology perspective, risk perspective, business perspective. So eventually, kind of in January 2022, we formally kind of set up this team for really focus on driving solutions to meet the client's needs, obviously in a risk regulatory compliant fashion, and at the same time ensuring that we are building capabilities for the future. So 4 or 5 core domains which I see, which are focus areas, include digital money, payments. The second one, digital securities. Third one is around custody and asset servicing. Fourth is around trading and risk transfer, and fifth around distribution. So across the bank, across our businesses, we have initiatives which are driven to drive new innovative solutions in this space, as well as find opportunities to capture new business ideas, new clients, as well as internally kind of align and be ready that some of our traditional products need to change as the space evolves. How do we really do that? So that's been a long journey. Be pretty in a very good position. Last year, we must have made multiple initiative announcements in this space, and we continue to do so this year. And I'm very excited to be here. Over the last today, yesterday, the nature of people I met, the amount of work which is going on is very inspiring, very fascinating. So looking forward to further engagement in this space.
So Puneet, let's dig a little bit deeper, right? When you think about digital assets in Citi, if one extreme is you're the guy that goes around and says the same thing all the time and nobody wants to listen, the other extreme is you're meeting with the board and the CEO on a daily basis. Where does digital assets fit into Citi's strategy overall?
Yeah, I think what we've done ensure that whatever we are doing, it's very clearly, as I said, driven by what clients are actually asking us. So all our initiatives have some client or the other engaged, starting from the building out the solution process all the way to executing and delivering it. So that's been very fundamental to the strategy. Second piece is very important, that we need alignment at the senior management level. So Citi has 5 core business lines after the recent reorg. Leadership across all the 5 business lines need to be aligned with all the work we do. One unique thing we did is this is not a separate standalone unit. Bank does payments, bank does custody, bank does trading. So we want to ensure that all those respective businesses have this as a component of their overall strategy for the coming years, and future-proof themselves, ensure that they're meeting client demands. And so over the last 2 years, what we've done is really embedded that. Other piece we did, and which is very important for financial institutions, is ensuring there's a right risk infrastructure supporting this. So we appointed somebody for head of risk for this space from our enterprise risk team. We have leads which are domain experts in this across various risk stripes. And then further embedding it, we kind of put up a technology center of excellence, whose idea is to really forward look in terms of technology trends, inform our internal capabilities, and actually help build the tech stack which will enable us to deliver all of these services, which is very critical at the end of the day. So all those things which come together, frankly, from an institutional perspective to engage.
So client-driven, but it does sound like you're trying to do it the right way and be fairly 100%. Strategic about it, which is awesome. Well, you, Matt, like if you think about Fidelity, it's a huge organization, digital assets, has grown up through there. So the former head, Tom, now has moved over to sort of do more. Like he got promoted, which is awesome. Maybe it's a source of talent within your organization. But tell me about, like, I get the sense with Fidelity that digital assets is sort of the leading edge of the organization. But where does it fit? Do you get all the great talent and everybody else works on the TradFi side? Or like, what's
yes. I agree. It is a massive effort across the firm for us. And Fidelity is known for having this crypto mafia that have left Fidelity over the years. Matt Walsh, Nick Carter, Alex Thorne, where are you? And that it's great. They've gone out to do great things. But I think we're at a point now where we have talent now migrating internally as well. And I think Tom Jessup's a great example of that. He left leading the digital asset custody business to now run our entire brokerage operation for the entire company. So, it's great to have him in that seat. It's a massive effort across the firm, and it is a strategic priority because we view this as a massively disruptive technology and a massive opportunity for firms to get it right and get it done early. This, I would say, has the genesis of this has come from both the client demand from the clients up, but also I think, as I mentioned before, we had a view on this early versus other firms, so it's been a top-down initiative as well. Where I sit within asset management, digital assets is a massive focus. We're focused on building out a suite of alts for our clients, and digital assets is another major initiative that we're focused on as well. And there's client demand here, and there's sort of two forms of this. I would argue. One is just giving clients exposure to the actual layer one asset, right? Bitcoin, other assets. But then there's also this enabling technology where you've seen a lot of work in tokenization across the financial services industry the last few months here. We believe that could be transformative as well, right? So we're active in that space as well. So I think you have to have a long-term view, be willing to take measured risks, and make it a strategic priority so that people behave in the manner you want to achieve the goals the company puts out there.
I think it's really cool when digital assets gets to the point in more traditional finance organizations that it's attracting talent, it's breeding talent. If you think about MicroStrategy, we're doing a lot of work in AI. The smartest folks go work in AI. We hire, really great. It's an easy place to attract people, and then they go off and permeate throughout the company. That would be awesome. It sounds like that's starting to happen in your organizations. So Hunter, as you went down this ETP route, but just in general, with Bitwise, you're working with traditional finance banks all the time. And tell me what that experience is like as you go over to these banks to sort of work with you on the ETP. Are they sort of like, is it easy, or you have to make 18 phone calls until you find somebody who's going to talk to you?
By a show of hands, who owned Bitcoin in 2017? So some people who have a lot of experience with the space. I think, to your question, one of the remarkable things about Bitcoin in 2024 is that you can work with some of the largest financial institutions in the world, and many of the people that you would work with in any other asset class. And the reason I ask the question is because that hasn't always been true. There was a time when if you wanted to run a fund, there was only one administrator out of Colorado that would do any work on a fund that held Bitcoin. There was only one auditor that would do any work on a fund that held Bitcoin. There was a custodian out of Kentucky that was, your main option for custody. And so to fast forward today and how I think about getting to work with traditional financial institutions, it's pretty extraordinary for the space in making it accessible to people where they feel that they're getting the same sort of first-class treatment and counterparties as they would if they were buying any other asset. Today, Bank of New York Mellon is the administrator on our Bitcoin ETF and the cash custodian. And we work with a host of different banks as authorized participants and so on and so forth, which you could go more into. Certainly, these financial institutions have endured for a very long time and have the trust that they have by being very detailed and cautious about the way that they do things. And that applies to this space as well. There's one bank that did 2 months of diligence on us, and I did many thorough interviews before they decided to work with Bitwise. So there's a level of rigor there, but I think it's an amazing development in 2024 that hasn't always been true of, even Bitcoin has been around and has been the same. The ecosystem around it, I think in 2024, is starting to be the same sort of, no longer minor leagues, but the same tier ecosystem that a wealth manager would expect, for instance, if they were buying an ETP in any other category. So I think it's been an amazing development over even just the last 6 months to some extent.
Yeah, so that's great. So let's dig into sort of, going and finding an authorized participant. And I think people are surprised to hear some of the large banks who publicly say one thing and privately are taking part. What does that look like? Did you have to go out? Were you recruiting them? Were they recruiting you? Was it a simple conversation? Did you call Puneet up and say, hey, can you help me out? Like, what does that look like?
This is fascinating. So in general, the team at Bitwise, we talked a little about building teams. We have the luxury of building a team from a clean sheet of paper, and we say if we're going to purpose build for Bitcoin in this space, what is our dream team? And then we try to get those people to join the company. So there are people who have backgrounds in open source software development and cryptography, and there are other people who have decades of experience in ETFs and asset management, and then we try to build that team. So our capital markets team already has relationships with most of the APs. It's a relatively small world. And we go out and we approach the ones that are some of the most accomplished. I think public names are Virtu and Jane Street. Macquarie is a public name on our fund. There's another AP on our fund that is definitely a household name bank, but we have been asked not to mention. So there's still a range of people's comfort in the public forum. But we go out and we try to recruit the best counterparties. And I will tell you that before the Bitcoin ETFs launched, for those of you who don't know, again, I mentioned Bitwise strives to be a best-of-breed specialist in this space, the same way you would think of Apollo in private credit or Brookfield in infrastructure or Blackstone in private real estate. We're purpose-building for this space, but we're not Fidelity and we're not BlackRock. So we had to do a little bit of begging for people to take us seriously. That changed after the launch, and we started to have inbound from some firms that wanted to join as an AP. So I guess I just can't emphasize enough. I think that the Bitcoin ETFs have really brought Bitcoin into the realm of possibility for a lot of traditional financial institutions, to the point where, for the first time in 6.5 years, we have banks reaching out to us looking to be an authorized participant on a Bitcoin fund.
That's a great evolution. I do think it's funny that you went and said, hey, you want to be an AP? And they're like, yeah, but you can't tell anyone we're associated with you.
Yeah, that's remarkable. There's actually a bank with a wealth management division that recently, they spent 2 months evaluating Bitcoin ETFs. They approved the Bitwise Bitcoin ETF for advisors to put in portfolios. And they specifically asked that I not tweet their name.
Because you would have otherwise.
I may have otherwise. But yeah, they didn't put out a press release, so it's not publicly known. I think that's a remarkable part of the first quarter of this year, is that a lot of traditional and reputable firms have started engaging with Bitcoin in a way they never have before, but so few of them are saying anything about it. If you just scroll through your LinkedIn or you read press releases, you would think that nothing has changed versus last year, and I'll just tell you the world has completely changed versus last year, but for now, most or many are preferring not to have it be public.
And just to add one more comment to this, what is also enabled is the entire ecosystem to become even more mature. I mean, if you go through the diligence process of onboarding, it's complex, but it's very thorough. And it asks you questions around every aspect of it. So once you've gone through that process, you actually become more mature in terms of how do you run the company. A sustainable way, not sustainable way? Are you managing risk properly? So just the sheer fact that now these traditional financial institutions, which have connected with many of these providers and so on and so forth, is actually enable the entire infrastructure to get enabled better. So if it's the flip side of it, where an ETF by established fund manager now goes and procures services from a typical crypto native company, that company now actually has gone up in terms of their understanding and capability because they've gone through that review. So that also I find very fascinating ancillary benefit, frankly, because the ecosystem needs to get matured as this asset class becomes mature. This has been one of the big triggers this year.
Yeah. The story that you're talking about with launching the ETP reminds me of when we, MicroStrategy, went into Bitcoin in 2020. The number of law firms, it wasn't even a number. There was one lawyer, he's here, who knew anything. He'll be up here. The number of accountants or Big Four, no, there was one accountant who sort of knew what they were doing when it came to public companies and Bitcoin. And the number of banks that were willing to work with us on our first convert numbered also in one. And now 4 years or 3.5 years later, that's all multiplied. But we always remember who was first, right? Mm-hmm. But it has evolved a lot, and a lot of times you have to write your own playbook, and then people will start to learn from it. Now, Fidelity is unique in the ETP space in that you're also a custodian. Mm-hmm. Tell me about that differentiation, distinction, and does that give you any benefits over others?
For sure. I mean, as it said before, we have decades of experience in this space and built our own custody solution and understand that very well, and the risks and considerations when building a custody solution and what it takes there. So we were very comfortable relying on our business partners there for the custody of the ETP. It's a good story. It's an integrated story. Fidelity has a lot of trust by our clients, and they expect the highest quality of service, and we hope to deliver that with this product as well. So naturally using our own custodian made total sense to us. It does give us some economies of scale. Obviously simplicity of operating in the background since we're all under one roof. But yeah, it's been a good success so far and looking forward to doing more, so.
Great. Puneet, so Citibank's huge worldwide footprint, right? And I know you sort of narrowed it down a little bit or focused yourself a little bit more. Tell me, as you work with customers around the world, are you seeing different trends as you're working with technologists around the world? Are you finding some areas to be much more open to working with Bitcoin and with Citi in general with digital assets? So what are the global regional trends you're seeing?
Yeah, obviously the companies in the US are highly competitive and very kind of on the cutting edge in terms of embracing innovation. So that holds true. But this also is very global, where companies, in Middle East, with regulators which are very aligned with kind of building an ecosystem, or Singapore, or in Asia, where there are certain assets, in certain cases they can actually leapfrog from a technology perspective. Many of those cases, we do see a much closer engagement, but kind of in terms of the clients we work with, which are kind of large corporations, large asset managers, large funds and hedge funds globally, what is also equally important is that whatever we build actually meets their risk criteria as well, just like Hunter mentioned, kind of same thing here from us and their perspective. And other piece which is important is that we make it very easy. If it requires signing another legal agreement, if it requires I need to build a new API connectivity, if it requires I need to do something different, I want to abstract away the complexity from a client perspective as much as possible, where we kind of insource the complexity, but from a client perspective, make it very seamless. And that has been, I think, a core trend which I see, where from a client perspective, as long as you can show value, and you can show that effort needed to drive that value is minimal from their point of view, because there are many challenges going on and many things to invest in. To the extent we can do that, we get a very positive reception. We worked with a client called Maersk, which is a global shipping line, in terms of making the logistics easier as they pass through certain canals, which was a highly complex process with money stuck in guarantees for a long time. Kind of we tried to work through many of those issues. So definitely we see a client level receptivity on this, but at the same time ensuring that from their point of view, they can do it in a sound fashion and in an easier fashion.
Very interesting. And so you had mentioned earlier, as you talked about the portfolio of services you're exploring, that custody was one of them. In one of the earlier panels, I think we talked about the complexity of a bank providing custody services for Bitcoin, meaning you'd have to carry a matching amount of Bitcoin on your balance sheet, et cetera. And so there's challenges there. Tell me about how you're thinking about that, how you're facing that, how you're going to compete with Fidelity, who isn't a bank. So sort of how does that work overall?
Yes, I mean, Citi is a big custodian for securities globally. We connected across multiple markets and in leading position in Latin America, leading position in Europe, and so on. We also started by providing custody for tokenized bonds in Singapore, which is like the first foray in terms of how do you look at custody for instruments which are on a blockchain network. But at the same time, there are complexities when it comes to public blockchains, including Bitcoin, for example, both from an accounting rule perspective, which requires that you add typically, when you custody any assets, this is not on your balance sheet. You're doing it on behalf of your customer. You're actually segregating it, and you're not using it for your own purpose. And then customers have certain specific rights in terms of kind of information on that, as well as reporting on that, and so on. But in terms of public blockchains, the accounting rule called SAB 121, which I think you will probably talk about in a panel later in more detail, requires you to add it to the balance sheet, which makes it highly complex in terms of how you really deliver that. Because when you have it on your balance sheet, now you need to hold capital aside. So some of those challenges do continue to come through, and we need to figure out kind of right approach there. But that doesn't mean that you don't build technological capabilities, but how you want to engage in this ecosystem gets really driven by the commercial decision behind it and the regulatory construct behind it.
So to the extent you're comfortable, sharing, like how far is Citi away from being an actual Bitcoin custodian?
Yeah, I can't really say
months,
right now.
years?
It's very difficult to say.
Yeah. Okay.
Yeah.
But it's something you're looking at pretty seriously, which is.
I mean, we're looking at kind of custody in this space in general, and then really how do you engage in this? What is the right area for taking the first step and the second step? is all really driven by the commercial considerations, risk considerations, regulatory considerations.
Do you expect at some point all the major banks will be Bitcoin custodians, like 10 years out, that's just going to be a standard offering?
Totally. I think it's part dependent, and each bank strategy dependent, how they want to engage in this. And there are some banks who are very custody focused, and they might decide to pivot and not pivot. Some banks are not. So really, you would actually see the ecosystem evolve based on each institution's strategic priorities and how they want to engage in this space, how they consider risk in this space, and can they actually manage it? Because you can understand risk, but if you build the infrastructure to manage it, that's what enables you to offer any service. So that's another very important thing. I also think the overall ecosystem needs to develop as well to support it. We'll talk about it later in terms of the kind of companies we're working with, which are small fintech companies in many cases. But the entire ecosystem to actually support many of those pieces are important as well. We just met over lunch somebody focused on insurance, for example, and that market developing there. So you do see different components of this now maturing. I think that is a good path. Once that is in place, I think it enables a lot of risk factors to be resolved.
Yeah, it's, I mean, you said it, right? Like if customers are demanding it, right, which I assume they are going to at some point, then the bank should provide it. I mean, Hunter, you spend a lot of time with all these banks. Like when do you see these traditional finance banks crossing that chasm, if you will? Or maybe they have because they're APs, et cetera, on ETPs.
Yeah, so I think it's a great question, and I would defer to your perspective on anything. But an important nuance that I think is worth appreciating about the Bitcoin ETF, not to, it's a topic everyone is sick of hearing about, but it's very hard, and you just enumerated some of the ways in which it's very hard for a lot of banks and broker-dealers to touch Bitcoin. Mm-hmm. If you take it and you put it in a Tupperware called a security, then there's a lot more you can do. And a remarkable thing about the Bitcoin ETF is it's just Bitcoin in a Tupperware, which is the security, and now you can do a lot with it. So any bank that is allowing clients to trade a Bitcoin ETF is, in effect, allowing the trading of Bitcoin, but it's that the ETF format allows it to slot onto the existing systems, the existing rails, and so it's almost Bitcoin coming to the bank as opposed to the bank going towards Bitcoin. And I think that you're going to see more and more as people realize that things are now possible. I'll give you one brief anecdote. We were out at an outing with one of our APs, who it was a big decision to start being an AP for a Bitcoin ETP, even though it's just a security. The question of do we want to associate with a Bitcoin thing. They decided to do it. It has ended up being so simple and valuable that at the game they were like, we're thinking about doing loans, options, structured products, the whole conventional picture of services that you would expect a bank to be thinking about is now populating in their minds because they realize through the construct of the ETP they can bring Bitcoin into their business and into their format. So I think that those explorations will take place this year. I don't think that sort of the whole of financial institutions will arrive in Bitcoin fully formed this year, but I think that the wrapper of the ETP is going to allow a lot more services to have the lights turned on around Bitcoin.
Yeah, you're right. I mean, kind of if you think of the entire ETF value chain, and we refer to a few things, transfer agency, fund admin, custody of those ETFs, prime brokerage and agency trading, distribution, all those pieces are getting enabled some which way through traditional financial institutions playing different roles. So that's, I think, a good way for that engagement to start to happen.
Yeah, whenever you have trading volume, asset growth, demand, there's going to be opportunities for these players in the ecosystem to make money, and they want to get involved. So they've only been live for, 3.5 months, and the category's been so successful, and really, I'd say, probably faster than we thought it would be. It is sort of pulling forward kind of some of these decisions and entrance into the market, right? Even approvals at home offices is happening for these faster than it would for any other type of ETF, right? So I do think the success and interest of this asset class in Bitcoin itself is almost pulling some of this inward here. So
So I like the Tupperware example, but when you were saying that, I was picturing this person in a radioactive suit, like carrying uranium in like a Tupperware. That's what I was picturing, because we were having some great conversations last night. There are some folks out here who have great businesses and they can't get a corporate bank account with certain banks, and it's not that they're asking the corporate bank to hold Bitcoin.
Yep.
It's they're asking them just to hold fiat currency, and they're not asking for loans, right? And that's even harder. And we've been through this too, trying to get loans and these things. So there's the Tupperware example, but if it's it's almost as if it's emanating things that then don't allow the traditional banks to even want to do traditional banking with you, right? When do we get over that?
I think that. The space has an irrevocable history, and that history is an aura that looks like risk and looks like tail cases, and I think that unfortunately has caused many firms that care about risk and reputations and so on and so forth to say it's not worth the surface area of risk that we can't even be certain we've sized up. So that, what you're describing, the even just cash banking has been difficult in this space over the years. I think that that's changing this year. I just think that the polarization or the taboo-ness of, look, there's no investment in the world that every person in the world is going to, you can find people who don't like Microsoft stock, you can find people who don't like dollars, whatever. So it's fair for people to say, I don't want to own this investment asset. But it's untouchable dynamic, like it's not safe to touch. I think that is going away starting this year. And it won't be 1 month, but I think that the journey of it no longer being something that you can't touch and you sort of have an intuition is not safe, I think that's changing now.
I agree. I think the first quarter of this year has fundamentally changed the way the traditional finance space, and you can't argue with success, right? With how quickly these ETPs have grown, the number of conversations, inbounds, all these things we get now with the traditional finance sector has just completely changed this year, and you guys have been a big part of that. Well, let's now talk a little bit about within banks, sort of the technology side of Bitcoin, and what are you doing? I know you alluded to it a little bit, Puneet, but just in general, for all of you, what are you doing on the Bitcoin technology investment side? Anyone can go first.
Just kind of starting off from an investment perspective. Some of the things which we've done early on and continue to do so is within Citi, there's a culture of actively working with fintechs, building solutions in this, and we don't think innovation can entirely happen internally. We love to partner. And as part of that, we also make investments in the fintech firms. So in the blockchain, Bitcoin, DLT, digital asset space, we made about 20 so far. But some of the relevant ones which are pretty meaningful, and to call out a company called Amber Data, provides data analytics. They launched a thing called Amber Lens, and you can actually see real time what is going on with the ETF market, what's happening with Bitcoin, what's happening with others. So very interesting. Another company called Talos, which are effectively building the entire trade lifecycle management system, where you can execute trade on different trading venues, but then after that kind of figure out the settlement cycles associated with it. Again, kind of one of the investments we made as part of that company, as part of our strategic investment. And then another one called TRM Labs. Again, all of these are very meaningful because TRM Labs focus is compliance and ensuring that you can do transaction monitoring, which is a very critical requirement for AML. So some of these examples are those where you kind of see these fintechs which are starting to develop solutions which are very meaningful. They solve a problem. And as part of our overall strategy, while we might have our own tech stack, but we will actually lean on many of this to support and fill in certain capability gaps which might be in place. So that has been a very fascinating journey, and we are close partners with them because it's a strategic investment, it's not a venture investment purely, where we will actually consult in terms of providing our insight into the space, what the requirements of a bank might be, and then kind of work collaboratively to see how we can insert their solutions wherever appropriate.
Great. So what are you doing at Fidelity?
Yeah, Fidelity, we're want to be very supportive of the ecosystem, right? So in certain verticals, we will build it ourselves, and others we will partner and invest. We have a private capital team that deploys venture money in a variety of different ways in this ecosystem. Data providers that you talked about, like Coinmetrics, we're an investor in. Even offerings where it might not be a core offering for us right now. So like Casa does multi-sig custody, very interesting company there. So we have multiple bets and multiple investments kind of across the board here. And I think that'll continue. And I do think there'll be interesting opportunities in the venture vertical in this space as things continue to evolve here, right? Bitcoin's going to do its thing, but there's going to be picks and shovels and other ecosystem type companies that are going to need to get built to help bring this thing to what we're talking about here. And we'll be right there investing where it makes sense.
And Matt, are these investments sort of venture capital just looking for a return, or are you also investing to bring technology into Fidelity?
Yeah, we've done both. And this isn't just crypto. We've done this across multiple sectors, right? Other fintechs or even other parts of our business. So if it makes sense to bring in, we do it. Otherwise, it would just be a portfolio company. But if it makes sense to integrate in a diversified financial services company, then it's definitely a possibility.
Great. What are you seeing, Hunter?
Yeah. A way to think about Bitwise is that we're sort of an agent on behalf of our clients, of investors. So we spend time understanding, meeting with developers, studying developments in the space, and we help our clients understand them so they can say, I want to have exposure to the space, I want to participate in Bitcoin, but I don't have time to study it myself. So we will go out and we'll meet with Robin from BitVM, or we'll spend time with Michael from Bitcoin Core, and then try to relay that in a package that is understandable and time efficient. But it also works the other way. So we want Bitcoin and we want the ecosystem to be successful. And when we see moments where we can advocate for something that we think is good for the ecosystem and good for investors, we will play that role. So to give you an example, we worked with our Bitcoin custodian to consult with them. They're very competent and talented, but to talk through with them why they should upgrade their Bitcoin wallet addresses from traditional SegWit to Taproot. And over the course of about 2 months this year, they rolled that out. And we advocated for that because we thought that was the best thing, and then we went in and worked to have that happen. We thought that just sort of Bitcoin is so powerful as a distributed public ledger. That's obviously why everyone is interested. It's introduced something new. We thought that you should be able to, while we do want to put it in the conventional Tupperware, so to speak, of the ETP, we can do better because it's a public ledger. So we worked with our counterparties to be able to publish the public wallet addresses of the Bitcoin held in the ETP so that any investor can confirm for themselves that the Bitcoin is there. There's a company here called Hoseki who we've worked with to do an attestation that the Bitcoin is there. So the way that we play a role with these things is we try to spend time with developers, with companies in the ecosystem. We try to both, in one direction, understand what they're doing so we can be a helpful educator to our clients who have a limited amount of time. And from the other dimension, we try to advance or encourage development in the direction that we think will help the space really flourish. We're rooting for investors and we're rooting for the ecosystem. And so we sort of sit in between a lot of different things. And we're ultimately open architecture. So we will work with the best counterparties and service providers, et cetera. But we play that role with them usually.
Great, thanks. So maybe back to you, Puneet, and let's turn to the investment banking side, right? Like, what a lot of these large banks are known for, big margin producers. Citi, partnered with us on our round of last two converts and underwrote it. First bulge bracket bank that actually underwrote a financing specifically for the purpose of putting it into Bitcoin. So thank you for that. What are you seeing from the investment banking side? Are the big banks starting to open up and thinking about productizing things specific to Bitcoin?
Yeah, we've been kind of open in terms of working with select clients and kind of from a capital market strategic advisory perspective. Actually, Citi led, including MicroStrategy, the last 3 of the largest issuances in this space, almost $2.7 billion raised. To support of the ecosystem through the capital market perspective. So that has been a very fascinating journey. We do think that this sector requires kind of capital creation to happen in different formats, and definitely very supportive of working. Through the work we do across the domain, we build a lot of expertise as well, which is very meaningful for the investment banking team to leverage, because then kind of they have the same infrastructure supporting the bank available to them in terms of their engagement in the sector. So definitely pioneering a lot of work in that space.
Yeah, what about you, Matt and Hunter? What do you see as far as some of these larger banks starting to offer Bitcoin-specific products, underwriting Bitcoin-specific loans? Do you see this as an important part of the evolution?
I think the first wave here is going to be just on their wealth side, right? Getting the products available for advisory, which was talked about earlier. I think it takes a certain leadership culture and a certain vision for adoption inside these bigger institutions. And it's not always convenient to kind of have a 10-year view at all times on something like this. So we'll see how it goes. Some firms are way more progressive on this than other firms, right? Other firms are kind of just, see it when I see it. But others are very, they want to partner with us. They want to get educated, like firms like Fidelity and Bitwise have been doing with many of these firms. And they're looking for just, guidance in the space and how to do it in a risk-averse manner and give their clients what they need. So I think it just takes time. I think about that chart that Michael Saylor showed earlier, where it was the crazy 4 years we just went through, and the launch of the ETPs kind of ended that era. I'd argue right now is like the age of education, right? It's firms like Fidelity and Bitwise and others, doing that yeoman's work of running around the country, educating home offices, these financial institutions, advisors and others. Just now is the time, right? Now is the time. Here's why. It's not going away. This isn't just, drug dealer type money, right? There's an actual portfolio use case here, right? It's a disruptive technology. It's liquid. I think there's multiple reasons we can hit on now on the education side. And I think that's the burden's on us now, right? We finally have the products we wanted for years here, right? Now the burden is on us to really help grow the market together. And I think that's a huge obligation, but it's a massive opportunity for us.
I agree with everything he said, and I think that wealth looks like will engage first because they ultimately want to serve their clients, and there are over 50 million Americans that own Bitcoin or are engaged with the space, and we've seen a lot of banks and broker-dealers move faster than is even conventional on that front. I think another impression that I have of a lot of financial institutions looking at the space is they have a lot of awareness and good understanding and information. And then there are two challenges. Time constraint. Again, there's a lot of other priorities. They are who they are because of everything else besides Bitcoin. And the second is lining up a clean shot. And I don't know if this would resonate with you, but there's so many possibilities that sometimes there's a question of, okay, but what is the specific thing we should do for what customer and on what time frame? And so, for instance, I think right now you're starting to see that tokenizing assets is starting to look like a clean shot or an application or use case of the broader set of capabilities that might be one that's worth pushing forward and activating around. And so I think as clean shots emerge, I think being an AP is another clean shot that I think many say, okay, you know what, that is actually an action that looks straightforward. We understand the economic implications. We understand how to do that. So I think that there will be these moments because a lot of the financial institutions are so well informed, but they can't try everything. When you start to see clean shots, I think you'll see many people make a lot more progress in a spurt because they can now understand how to underwrite the opportunity, the risks, and so on and so forth, but are paying very close attention to look for those.
There's often Bitcoiners inside these firms too. And it's how do you identify them and help them evangelize within their firm to help advocate for what's going on here too. So that's the good thing is you tend to find the Bitcoiners at these firms and you can work with them. So. And
I agree with, I think, kind of just taking these clean shots where you can actually deliver something and which allows you to get out of the market quickly enough. And frankly, all of these things build on each other. When you build a capability that is kind of broad enough, then it allows you to launch one thing after the other. So we also have this capability portfolio approach to say what we can do now. But that doesn't mean that we don't build capabilities to do what we can do in future. So it is a step-by-step process, but starting to take certain clean shots, AP, the capital market transactions, the ETF work are immediately accessible and gonna get right alignment quickly. So that, I think that's a good start. But at the same time, you need to kind of build capabilities which future-proof the evolution, future-proof the institution from an evolution in the space, and be ready for kind of what's to come in the future.
So I respect the methodical approach. And this conference isn't called Bitcoin for private wealth or Bitcoin for wealth managers. It's called Bitcoin for corporations. And maybe I love this clean shot idea, but everyone has a different view of what a clean shot is, right? Like, some of the best hockey players would say that narrow gap, that's a clean shot, right? And so I guess I'll push the conversation a little bit. When do we get banks thinking that underwriting a convert is not just a clean shot? Right now we want, getting folks to do it. I feel like just like you're talking about getting banks to be an AP, sometimes you're having to ask, and where really they're the ones selling you services, right? So when do we get to the point where banks are pushing the services versus, going through the risk committee 18 times and saying, yeah, I guess we'll work with you? Like, when does that change occur? And when did they start seeing these simple things as clean shots?
Yeah, but I think when you say clean shot, these are also scalable opportunities. This is not that, this is one and done. Frankly, in my portfolio of initiatives, there are things which need to scale, but there are things we need to build. Then there are things we need to innovate, which are kind of further out. So we're thinking through scaling as well. So it's not just, you do one and done. You actually need to scale a lot of these things, because that's when the true value comes into the ecosystem, otherwise not worth it. And at the same time, you kind of keep building. So I think you think of scaling, you think of building, you think of innovating, all together as part of the overall portfolio, which finally kind of goes from one stage to another. As you build, you launch, you scale. You innovate, to you build, to you launch and scale. So ultimately, the idea should be that you scale many of these opportunities, and all of this should be scalable, otherwise not really worth it.
What do you guys think?
I mean, nobody wants to be wrong, right? So I think victory begets victory. I think a firm like you guys doing it first and working with a firm like Citi is showing the way. And it's going to take time, but I think many folks are going to watch this space and see how it plays out over time, and then maybe they'll be more open to the next offering that goes.
I think for people who've been following the space for many years, a decade, it can be hard to recognize, but we're in a different chapter as of 2024. And from my vantage point, everything is now possible. And one of the peculiarities of specifically this moment, as we sit here in May, is that there are many things underway that are not public. We have a corporate that is putting Bitcoin onto their balance sheet. They're a sizable company using our ETF. It's not yet public. There are banks working on certain things. It's not yet public. So I think we're in a new chapter where a lot of this can become possible, and I agree with what was said, which is that you guys have pioneered so many things, and then if you start to see a second and a third and a fourth, then it's a scalable initiative for the bank and the counterparty, and that's when the flywheel starts to spin. And so I think that the next 12 and 18 months may not feel like the last 12 and 18. It may feel like things are suddenly happening that you thought would take a very long time to happen, and you're like, oh my gosh, they're launching that, and then you'll see another one and a third one, because I do think people are pretty well educated, they're attentive, they're looking for those opportunities, and there are things underway now. I also think that in the same way that the Bitcoin ETF took this valuable asset that was hard to move around and hold, and you put it in the Tupperware and suddenly you can do a lot with it. I do think that having some of the very large and valuable Bitcoin and digital asset companies go public will be another one of those moments that establishes. I think if you ask the average investor, they think that this is maybe sort of a very sort of small niche space, but there are probably $10 billion companies in this industry. And it's just that they're private because the IPO markets have been closed for a little while. But I think if Chainalysis goes out, if Circle goes out, if Kraken goes out, if Fireblocks goes out, and you wait a minute, there's a lot of companies, and they all want to do convertible bond issuances. Now that can be an important part of the business in the investment bank. And so I think that's one other moment to look for is when does the IPO window open again? Now, not all of those. I'm not recommending investing in those companies. I'm saying it from a development perspective that I think it will be another sort of step function of maturity and will open up more opportunities for the financial services, the traditional financial services industry.
I think you're spot on, by the way. I think there's activity that's been happening between January and now that isn't yet public.
That's true.
That whether it be done with big banks or done with smaller ones, and public companies, private companies have started to get in. And I think it was mentioned this morning, knowing you're going to do it and then actually doing it takes some time, and then doing it and then disclosing it takes some time. And I do think in the next 12 to 18 months, or maybe even sooner, we'll start to see that wave of adoption of Bitcoin for corporations, which is a pretty exciting prospect, and your organizations have certainly led the way. So it's very exciting. Are there questions you want to ask each other?
Wow.
I have a lot.
You didn't know I was going to do that.
Yeah. I'd be curious to ask one for you, which is how internally Fidelity is one of the most important companies in America. Has this year changed sort of how the equity team or the fixed income team or the commodities team or the trade, how teams view FDAS and the group that has been chasing down this part of the market?
I think so. I think it's hard to ignore what happened the first quarter this year with these products. And I think people have, are paying attention now and spending more time learning about what this is, right? I think for a while, this topic may have been like a side of the desk type thing. I'll get to it. I'll learn about it at some point. But I do think the success here has awakened a lot of folks inside and outside financial services, right? So yeah, it's helpful, right? And it's a tailwind me and my team want to ride internally and just keep advocating and raising this up where we can, because over time this is going in one direction, right? It's going to continue to get adopted as an asset class over time, inside and outside Fidelity. So it's very encouraging, but it just takes time, unfortunately, right? These things take time. We have a massive brand, a lot to lose. We've massive trust with our clients and our investors. So everything we do is very methodical and thoughtful, and it just takes time. So.
And Hunter, if I can ask you, and you've been pioneer in this space, like even before ETFs, you had your fund, which has kind of done pretty well, available on many platforms. What's next? So after ETFs are done, after fund is done, how do you see? Is it like about scaling that business, embedding it and distributing it, or launching new services, new products? How do you really see the coming months?
For Bitwise?
Yeah, for Bitwise.
So Bitwise has been in space for 6.5 years. I used to have beautifully colored hair before that, and now it's a bit different. I think that 2024 for Bitwise and for many will be boring to some who have followed Bitcoin for a long time. But I'll tell you, we are having, I've traveled every week since the beginning of January. We'll be at 2 sort of national conferences for wealth management firms in the next 2 weeks. The pace and the amount of time that most of our clients have for Bitcoin is a conversation maybe once every 2 months or once a month or once a quarter, but it's not once a day. And that means progress needs a moment to happen. Even, I remember after the Bitcoin ETF launched, there was a client who emailed us and said, this is incredibly exciting. We're going to make it a top priority to get this in client portfolios. Can we set up a conversation in March? That was January. You emailed me in January. So I think sometimes those who are enthusiastically engaged with the space, we're so used to this sort of rapid pace of development. Something's happening every week. You think it's the Bitcoin halving, and suddenly it's about runes. And there's just always, but with many of our clients, they're trying to fit it into 99 other things that they're doing. And so I think the story of this year will be the year that Bitcoin entered the mainstream. That for those who know the crossing the chasm model, that it moved from the early adopter to the early majority, and we're focused with a lot of our clients They want to meet, they want to spend time, they want us to do a teach-in for, we've done a ton of academies and webinars for staff. So I think we'll be focused on that this year, and I'm excited for that. One other thing I would just say on this topic is, again, for people who've been in the Bitcoin space for a long time, there's so many things that I think are intuitive to everyone in this room. And one of my hopes working in this industry is that as Bitcoin enters the mainstream, we don't shed all of the detail. Meaning it doesn't just become a ticker with a price return history, and you forget that it's a public distributed ledger. People don't know what the halving is. They don't know that you can examine that ledger yourself, and as any actor can verify a balance or transact. I hope that as adoption goes, so goes understanding. And if that's what you hope for, it will require some time to be absorbed. So we're going to be focused on that. We of course do a lot of other things. We have alpha products, and we have again, a large index fund. So we'll support clients however they want to participate, but I foresee this year a lot of time spent making sure people feel situated for Bitcoin to enter the first-class citizenry.
Great. So with that, so we'll just sort of see people gradually get involved this year. Last year, sitting here, if someone would say, what am I most excited about with the institutional adoption of Bitcoin, it would have been the potential approval of a Bitcoin ETF. Now you're sitting here this year, what do you look at a year out that you're saying, this is the one thing that I'm most excited about when it comes to institutional adoption of Bitcoin?
I mean, it's going to be these massive wirehouse type firms approving these things. We're talking, 25 to 40 trillion based on how you count the capital that will then be able to potentially touch Bitcoin, right? In a compliant, integrated, seamless manner, right? 'Cause that was always a hiccup for years, right? Hunter and I would run around, this is great, but it doesn't integrate into my workflow or whatever. I can't rebalance easily, I can't bill on it. This Tupperware chassis is beautiful, right? You can integrate it easily alongside other assets. So I think that is what I'm most excited about. Because once you're there, there's other bank shots, right? Home office models that control hundreds of billions in assets of these firms, right? So there's so many ways Bitcoin can get integrated on these platforms once it kind of gets the green light. So that's what I'm focused on.
Yes. Go ahead.
I'll just say, I'm excited there are a lot of people across America at RIAs, at banks, at other firms who have been sort of trying to educate their firm and help their firm see the opportunity, and I'm excited for those people to be heroes. I mean, it's felt like for a long time these people have fought a thankless battle. It's not that not the most celebrated thing to do internally, and I think that people are going to look back and say they made sure that we got into the internet and we didn't end up being Sears. Thank God for that person. And man, they were unappreciated for a little while. So I know a ton of these people across the country, and it has been thankless for a long time. So I would just add that dimension, which is there are a lot of people like everyone in this room inside of these organizations trying to figure out how to pull their organizations into a clean shot at the future, and I can't wait for them to be celebrated.
Yeah, I would kind of say maturity of the asset class itself, which brings in a lot of topics. How do you access? You want to direct access, you want through ETFs, you want through futures, you want some kind of derivative product. I think the maturity of that asset class and the access which comes with it, based on each one's individual views of this, I think that is going to be very meaningful. I can see that kind of you just called Bitcoin, but now you can have ETF, but then you can do futures. Maybe you can do NDFs on them. Maybe you can do some kind of structured note. Depending upon how you want to engage with an asset class, actually makes the market very mature. That makes kind of price discovery much more mature. So I do see accessibility, market maturity over the next 12 months to be very meaningful based on the initiatives which I see happening across the traditional financial institutions, crypto native firms, corporations, asset managers. So I think that's going to be exciting.
You want to know what I'm excited about?
Yes, sir.
And I'll tell you, I'm notoriously bad at predicting timing. In 2021, I remember we had this conference online, and I was convinced that a major corporate tech company was going to put Bitcoin on their balance sheet sometime in 2021, and I was wrong. This year, I think we'll call it a Fortune 100 company disclosing a material part of their balance sheet with Bitcoin. And that would be very exciting for us, for me, for the work that you've all done. So, gentlemen, I just want to thank you. for the conversation, for the support you've had for Bitcoin, and for all the work that you're doing. Thank you.
Right.
Thank you.
Thank you.